Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is Tuesday, August 23rd, 2022, and I'm coming to you for the second time for the Tuesday live stream. Welcome one and all. Hope you're having a great Tuesday. Apologies, I'm a bit late. I know I said 4 this morning, but stuff came up, and so yeah, it's 5:30 p.m. Eastern Standard Time in the DC area where I'm at. You'll live, and so will I. Those are kind of the perks to working for yourself. At the end of the job, we're still going to get the job. At the end of the day, we're still going to get the job done, right? We're going to, share our analysis, and we're going to have some fun. So, yeah, let me first check that the stream is okay. And remember to shout yourself out and like the stream on the way in. All right, looks okay. On the way in. Perfect. All right, and do leave me any requests for any charts you want me to look at. I'm going to try and keep this one short and sweet. So today, as the title suggests, we're going to look not only at crypto, but at the traditional markets. I personally have zero direct exposure, let's say, to traditional markets. I don't trade stocks. I don't trade options. I don't give a fuck about the DXY or, whatever the SPX is doing. I just look at stuff because I'm curious, right? And I'm not a troglodyte, I understand that there's correlation between digital assets and traditional markets, and a lot of people do look at those kinds of things, so why not? I just have a look. So what are the correlations? If you're new to this space, let's say this. Let me start here. I'm getting ahead of myself. So let's say about 15 months ago, and you can look this up, 12 to 15 months ago, people were writing articles. Actually, I didn't want to do that. Give me 1 second. I can't talk and do something. I can't talk and chew gum. Okay, good. About 12 to 15 months ago, people were writing articles about how Bitcoin and crypto assets were inversely correlated to traditional assets. So it was a great hedge against, whatever stocks you had tanking, okay? And that led a lot of investors to kind of de-risk in the digital asset space because, okay, if let's say you're a traditional asset fund manager and your funds are tanking, your stocks are tanking, but you know that there's this other big $1 trillion asset class that's going up while your traditional stocks are going down, why not gain exposure to those so that, you kind of hedge against a downtrend, right? But that didn't last too long, and we all know Bitcoin is about 13 years old to this point. Most altcoins are less than a decade old, right? You had Bitcoin, you had Litecoin, Ethereum, right? Maybe Ethereum's, 3-4 years old? I mean, these things are babies, right? You're talking about traditional funds that are 100 plus years old. So these index funds. But Bitcoin, this one won't go. Bitcoin and a lot of these other cryptos are just a few years old, right? So when you're looking at correlations and correlation coefficients, please don't read too much into it. Absolutely everything was correlated after COVID, right? Listen to Lynn Alden. She's a brilliant economist and financial mind, and she explains this really well. Basically, after a huge macro event like a COVID, literally everything gets on the same plane because it gets correlated. A black swan event like that makes everything kind of look and smell the same, right? So kind of because you have such a large influence of a macro factor, all of these markets start dancing in lockstep. whether they're traditionally or naturally correlated or not, for that time being, they are. Do you see what I mean? So that, but now, for, whatever reason, Bitcoin, the SPX, directly correlated, right? Bitcoin, the DXY, inversely correlated. Okay, so that's basically what we're going to look at. Those are the assumptions we're going to make. Translate, once again, in simpler terms, the DXY goes up, so the dollar index, so the basket of currencies that the dollar is pegged against, okay? So like the dollar, the euro, and whatever the fuck else. If that goes up, typically assets, equities, Bitcoin, they go down, and vice versa. So we're going to look at the DXY and what the DXY is doing. Now, the SPX, S&P 500, right? SPY, the options, NASDAQ. If they go up, typically crypto also goes up, okay? Now, you all know, if you're subscribed to the channel, I don't do my analysis like that. I just look at the charts. I'm a purist in that sense. I feel like if I look at the charts and I'm able to read the charts properly, I can ascertain all of that information without going into a million different asset classes and making all these correlations or whatever, right? But for the purposes of this live stream, I'm going to satisfy, I guess, what most people like to do is look at all of those things. It's fun. Why not? All right. So, Nice Hash Login says, going to list on all tier 1 this year. What do you mean? Please explain. Nice Hash Login. All right. Let's get started with Bitcoin and just look at it on a small time frame. So this morning I was saying how... Okay, so yesterday I was saying how it's likely that the 22nd was the de facto start of the bull run. De facto is not the right word. Let's say yesterday was the first actual impulsive day. So like if you're looking at positive price action, impulsive price action, what we say in Elliott wave theories, 5 waves up, that's yesterday. It started on the 22nd, okay? Because from my analysis, I counted those consolidation reversal waves in such a way that my second degree AB base was completed yesterday, okay? So that's how I'm seeing it. And so today, where's my pen? Here. When I'm looking at this right here, this to me looks impulsive. This to me looks like, I'll tell you what that looks like in a second, but that to me looks impulsive, okay? I could be wrong, but that's my read, okay? Now, we're at resistance, obviously, but I think we're going to work through it. So I'm on the 15-minute time frame. What do I like about this in terms of positive price action? Let's dive into this consolidation that we've been in since 6 a.m. right here. We can try and read this. All right, how are you going to read it? Firstly, I would say that this looks very much like an ending diagonal followed by a flat correction. All right, so stay with me. Ending diagonal, we know, is a wave pattern, an impulsive wave pattern that you get in wave 5 of an Elliott wave impulse. You only get that in wave 5, okay? And it can look a number of ways. You can get an ending diagonal that is, what would you call that? It's what's the word I'm looking for? It gets smaller. I don't know English right now. What's the word I'm looking for? It's converging. Okay, it's converging. Okay, so these 5 waves are converging. So you get subsequently smaller and smaller waves. Okay, or you can get an ending diagonal that looks and diverges, where it gets bigger and bigger. Okay, and I believe that the diverging ending diagonal is the more common one. I would, if I, gun to my head, I would check Procter and Frost, because they get into that kind of minutia. But I believe that the diverging one is more common. And here I believe we have a diverging ending diagonal. So whatever this is, you get 1, 2, 3, 4, and then 1, 2, 3, 4, 5, something like that, okay? And so I think that somewhere in here you have, let's see, or maybe it's like this. Maybe it's like this. 1, 2, 3, 4, 5, something like that, okay? And then this, I think that is accurate. I think this is my orthodox high for that wave 5 right here at exactly 21,637, okay? And let me just turn on volume to corroborate, to see if I can get a capitulative volume candle that shows me the end of the trend, okay? And I see, this is how I like to use indicators corroboratively. Always use price action. Most people don't know how to read price action. That's why most people are completely dumbfounded by any corrective consolidative price action, right? And you really do yourself a disservice. It's not that hard. It is more challenging than just using indicators. I know a lot of even successful traders, if you will, maybe they have a 60% hit rate, which is, you know, better than half. If you have good risk management, that's all you need, right, to make money, to be profitable. They only use indicators. Don't fall into that trap. It's not worth it. Price action is really not that hard to learn. Depending on, you know, what style of price action you want to learn. If you're learning Elliott wave, you know, get serious, hunker down for a few months, and you can get it. Anyway, what I see here, given this volume candle, I believe this is a capitulative volume candle. It's not like the biggest volume candle, so, but let's just say it is. I say that this is my initial break of structure, taking me to wave 4 of my previous trend, right? This is my 3-wave B wave, okay? And so, and then here I got a pivot, and then a 1, 2, 3, 4, 5. Okay? I believe that this is along the lines of what we're seeing here, okay? That's my small time frame. Remember, I'm reading the 15-minute time frame. So Nice Hash Login says, Volt Inu is the Shiba of 2022. Get a little and just hold 100 to 1,000x incoming. All right. All right, for Nice Hash Login, we're going to have a look at Volt Inu. That's hilarious, by the way. Volt Inu. I've never heard of Volt Inu. Where is it listed? Nice Hash Login. Is that a does KuCoin have that? Volt Inu. I don't even see it. Can you give me a chart? Because, you know, one of my rules is I don't invest blindly. If I can't chart it, I won't trade it. You know, not that I'm going to invest in it, but I just want to have a look. So if Nice Hash Login, if you can send us some information as to where we can find the chart, I'm happy to look at it. All right, so we do have, so I do believe that we have some continuation. So that's just looking at it from, you know, the Elliott wave standpoint. Let's zoom out for a second on the hourly time frame and just look at pure patterns. I do recognize that this is resistance. It's been resistance once, twice before. And I do recognize that in order for this to break out, we're going to need to break approximately 21.7, okay? So that's what I'm seeing just looking at, you know, price action in the aggregate. But I do think that you eventually get something like this, and we do see those kinds of patterns, like upward kind of diagonal and to the right consolidation, so slanted consolidation followed by a breakout. So that's what I'm seeing. Okay, that's the small time frame. You know my large time frame reads. This 3-day consolidation reversal pattern is, I'm counting like this. Initial break of structure to wave 4 of the previous trend. That's my A wave. This is my B wave, so that's my big B, right? You all know that the way I count these consolidation reversal patterns is I need 2 AB bases, 2 degrees of AB basing. That's my first degree, okay? Let me get that out of the way, clean up the chart. My second degree starts here, 1, 2, 3 waves, small a, 1, 2, 3, small b. That's why I'm looking at this as our impulse, okay? If you're completely confused as to what I said about AB basing, about needing 2 degrees, look at my previous work. I talk about this ad nauseum on the channel. Also refer to Ralph Nelson Elliott's seminal work, The Nature's Law, or subtitled The Secret of the Universe. That's one of his manuscripts where he talks briefly about AB basing. And then also Bob Prechter and AJ Frost's wave theory, okay? 13th edition. I would take the most recent edition, right? And they talk about it briefly, but just mind you, Prechter and Frost think AB basing is bullshit, but that's fine. You know, you can't be perfect. They were pretty damn close in terms of just being really competent Ellioticians. Yeah. So Nice Hash Login says that Volt Inu is a decentralized app. Is that what you're saying? So you can trade it only on a decentralized exchange. It's one of those. All right. So that's my sort of small time frame read on Bitcoin and why I think that this is the impulse. And then if you zoom out really quickly, I'm just reiterating this. If you're subscribed, you'll know exactly what I think about Bitcoin, but for the purposes of the live stream, it's important to say I'm on the daily time frame. Look at these candles. You know, anybody who does any kind of rudimentary candlestick charting analysis understands that these are what we call bullish hammer candles. There's a long wick to the downside designating strong buying pressure, okay? And you have 2 consecutive days of bullish hammer candles. It's very likely that price push up, okay? And there's clearly a resistance right here. That's the resistance that we just pointed out at around 21.7, okay? So this is what it looks like on the high time frame. And also, more important than that is the fact that on the high time frame, you also have this, from the low that you set here around 17K in June, you have these 2 degrees of consolidation reversal patterns, right? Again, you have a 3-wave move, an A wave or initial break of structure, or as the Wyckoff people call the AR, automatic reaction or automatic rally, targeting wave 4 of the previous trend, and then your subsequent B wave that is a 3-wave structure. So that's your big A, your big B, that's your first degree of consolidation reversal. And then you have another initial break of structure, but it's a 5-wave move, okay? And you all know when you get a 5-wave move, you need 3 waves to respect the 618 because that is what we call a zigzag, okay? So you go 5 waves, 3 waves, 5 waves. That would complete the move. We've seen this before. Typically, zigzags that print as consolidation reversal patterns, that move right here, the last leg of the zigzag, if you want to be really technical, you call this a WXY. The Y wave serves as the first impulsive wave up and out of the consolidation reversal pattern, okay? And so that is what I think we are in, and we entered on the 22nd, so yesterday, right? Now, what is the target for this and the timing? I gave this a couple days ago, and I'm not going to do this right here, right now, because I'm going to try and stick to the script with the DXY, looking at the DXY and the SPX traditional markets. But my targets, more or less, are using Fibonacci time, because remember, you're not only doing price analysis, but you're also doing time analysis. You have 2 axes to contend with. So time is a factor. It doesn't mean that you can accurately predict exactly when moves are going to play out, but you can get a rough estimate. And the rough estimate using Fibonacci time analysis is if you use the if you use this and then this retracement, this wave taken to the 1 extension, I think hits on the 25th or the 26th, taken to the 1618 extension of time, right? I'm not doing price, I'm doing time. Takes you to the 2nd of September or something like that, okay? More or less, right? It's not that important, but just more or less. If, and again, just so you understand, if this wave takes as long as this wave took to mature, then this will hit on those dates. And then if it's 1, like I said, basically if it's 1, it's going to take the same amount of time. If it's 1618, which is, as you all know, the phi ratio or the golden mean, it's going to take till September 2nd or something like that, okay? I'm not going to do that all now because I already did it. And then what are the targets? I did that this morning. If you channel this really quickly, we can do that again real quick. So if you put a channel, and this is clearly channeled, or this can be channeled, right? This is a channel I like, right? People were channeling this way prematurely, and they were kind of picking and choosing what they wanted to channel. If you're going to channel the whole damn thing, all right? And this is a legitimate channel where you have a lot of activity on the bottom and sufficient activity on the top. You have 4 touches on the bottom, 4 touches on the top. That is a channel, my friends. You need touch points. You can't just channel whatever the hell you want, because when we're up here, people were channeling this, which is fine, but it doesn't, what do you do with this, right? But now it's a legitimate channel. I hope you can see. And what do we know about channels? They typically, if they break in whatever way they break, they tend to break the height of the channel. Okay, so right here, this is measuring the height of the channel superimposed from the site of breakout, which would be the top of this channel at around 26K. So that's how I got my target this morning of 32K thereabouts. All right, so that's Bitcoin. So basically all I'm saying, TLDR, or in simple terms, I'm saying we're going to go the fuck up. And this is going to be the beginning of this 2022 bull run, all right? And I have a video. You can search the channel, but I project Bitcoin to hit around 1.7 million. And my projected time, again, using Fibonacci time analysis, because you're not only doing analysis on price, but you're also doing analysis on time. I have actually a date, February 19th, 2023. There's a video on that. Just search the channel. I think it's, I don't remember what it's called, to be honest, but there's a video on that, on my Bitcoin prediction for this bull run, okay? Now let's move on. So I'm seeing Bitcoin going up, and one of the main reasons I'm seeing going up, not just this, but guys, when you're doing analysis, you don't want to get too provincial. You don't want to get too tunnel visioned, right? You want to be able to not only be able to dive into the 15 small time frames to understand intraday price action, but also understand what's been going on. Like, what's your context? And this is the power of Elliott wave theory, because it allows you to actually do analysis, like broad sort of macro analysis, without having to think of the economy and inflation and the Fed and money printing and all that stuff. Like, just looking at the charts, okay? And just looking at the charts, there's so many things that tell me that this is it, right? That 17K was it, all right? And I'm just going to go through with this because it's important, because the idea of crypto going up and the traditional markets going up and the DXY going down all assumes just technically that this downtrend that you see right here is exhausted. Like, how do we know that that's it? A lot of people on Twitter, with many more followers than I do, and they've actually been doing quite well in this downtrend, are saying this is just a bear flag and we're gonna dump some more, right? Sure, but technically that doesn't make any sense, because if you take this as a double top, you take the height of this, you get this. Your target is met. All right, that's the most rudimentary way of doing this chart analysis. Again, I'm on the log scale, so I'm faithfully representing this price action. A lot of analysts don't even know when to put on the log scale. They do their analysis like this, right? Like, I'm not going to name any names because I don't want to deride anyone, but that is actually one of the main issues I've seen, where analysts have tried to represent price action between 68,000 and 17,000 on the arithmetic scale, and they're measuring the height of this double top and saying there must be more to go because I'm measuring here and I'm seeing that we're not quite yet meeting that target. The issue is you can't faithfully represent that price action except on the log scale. And if you're on the log scale and you do the measurement, and I'm going to prove it to you right here, you take a line tool, simple trend line, right, from the top of this M top right here, and this is a base, and what do you see? From the point of breakdown, you've met your target. Do you see that? Right? So that's the first thing most people should do to kind of reassure themselves, okay, this downtrend is finished. Now, you can get more technical, and I've done this before on the channel. If you're subscribed, you'll know. One thing you can do is you can try and make sense of this ABC flat correction, right? And now you just have to read this impulse. How do you read this? This is a double zigzag, okay? That's kind of tricky to know if you're kind of beginning. I didn't know what a double zigzag was a few months ago. I mean, I wasn't keen on it. Like, I'd heard about it, but I hadn't studied it. So it wasn't really in my ken when I was reading, right? Because as everyone knows, I fully admit to have started building positions here. I thought it was it. I thought this was over. I was reading this as a 5-wave impulse, but I was wrong, obviously. And the interesting things about double zigzags is you can read them quite well. You take your Fibonacci extension tool from the beginning. So this would be W, the first leg, retracement of X. And then you get your target between 1 and 1, 2, 3, 6, which is where usually your last legs of your flat corrections hit, okay? So that's the first thing. And then you can also just measure this ABC correction from the beginning. So this A wave, Nicolas, s'il te plaît. Nicolas, no flapping, please. Thank you. This A wave, your retracement of the B wave, and what do you get? Your 1618, right? You hit your 5 ratio. The math shows you and tells you that this is likely it. All right. So that is basically what I want to say about Bitcoin and why we can, to a high degree of probability, assume that this indeed right here is our consolidation reversal pattern. Now, what do the traditional markets say? What do equities say? What does the dollar index say? Let's move on to that. And I mean, I didn't even mention this, but I mean, just really quickly, if you guys want to look at Bitcoin dominance, and for those of you who don't know, Bitcoin dominance is a measure of how dominant, the percentage of total market cap that Bitcoin makes up in the cryptocurrency market, okay? And so the higher it is, usually the more Bitcoin, the more money is in Bitcoin vis-a-vis the entire crypto market. Usually the lower Bitcoin dominance goes, it basically tells you that there's more money in other assets, in other projects, because that typically means other projects are going up. So I'm just going to show you this really quickly. I know I didn't say I was going to talk about this. I'm going to talk about the traditional markets in a second, but just look at this. Bitcoin dominance has never been below this area that we are now, okay? Around 40%. We've wicked it down to 35% earlier in 2017. That represented a massive altcoin season. But basically what you have here is a huge declension, an ABC pattern, and it's very likely that this play out exactly what I drew, where you get a big dump, and actually this third wave should come down even further. So it should look something like this. I think you're going to get the height of this move right here, right, broken down. Do you see what? You see how this is an head and shoulders, which is a bearish pattern, and technically the measured move of that bearish pattern is the height of it, right, to the neckline, superimposed from the bottom of the neckline. So dominance should come down to like 23%. Like, for dominance to come down to 23%, do you understand the type of alt season we're going to see, and that we're literally on the cusp of? This is another reason. Everything kind of dances to the same tune, right? I call this corroborative analysis. Like, you can look at just one chart, but then if you start looking at other charts, and we know Bitcoin dominance and altcoins, like, that is a strong correlation there, right? It's not some outside market. It's a direct read on what's happening in crypto, right? So basically, this is reading the correlation between Bitcoin and other assets in the cryptocurrency markets and how strong Bitcoin is against them. This is basically telling us that you want to be in other assets other than Bitcoin, because Bitcoin's going to lose value against them. This is what this chart is saying. It's actually screaming it. Put your money in anything other than Bitcoin, because it's going to rise against Bitcoin. Pretty much anything against it. Do you see what this means? And then once it hits, you want to probably de-risk into Bitcoin or the US dollar or whatever your fiat currency, or stable coins. Okay, so that's dominance. Dominance is saying basically the same thing that our charts are saying, that we're likely to go into an alt season. We're likely to start pumping. Bitcoin's likely to start pumping, but altcoins are likely to start pumping a lot more against Bitcoin. Okay, now looking at the traditional markets, let's first look at the DXY. Okay, and people have been saying, oh, the DXY is pumping, it's going to Valhalla, it's never going to end. Once again, this is the beauty of being able to read charts, right? What do we see here? Very, very simply, all right, and this is like Elliott Wave Theory 101. We say 1, 2, 3, 4, 5. That's what I'm seeing. Okay, and okay, let's put that down. Okay, this is on the weekly chart. Okay, so this move has been going on for quite some time. Like, the dollar index has been pumping since May of 2011. Look at this. This is massive, right? I'm on the weekly chart. I'm looking at the DXY on the weekly chart. Okay, so this is not a small thing. This is 4,000 days of positive price action on the dollar index, okay? And I'm counting 5 waves. And so when we're looking at, let me erase this, because I haven't done this before, and this is the good thing. I've looked at the dollar index, but a lot of times when I'm doing these analyses live, for some reason I get certain insights that I never got before. That's one of the reasons I like doing these. Guys, if you're getting value, please like, share, and subscribe. Alright, so I'm counting 5 waves on the weekly. This is a massive chart. Again, 4,000 days since 2011. Dollar's just been pumping. Crazy, okay? What we're going to do is we're going to put the count in, alright, using primary impulse wave. So right here, we're going to do something like this. I'm going to change the degree in a second. All right, something like this. This might not be finished. Okay, we're gonna zoom in a second, but for now, let's just do the large time frame analysis. Let's turn the degree to primary. Okay, and let's measure. So this is, I think, important to do when you're kind of trying to read waves. You want to use your tools like your fib levels to not confirm, but give you a good idea as to what's going on. Okay, so I just took my purported wave 1 retracement of wave 2, and we all know wave 1 typically is retraced by wave 2, which retraces between the 382 and the 618 Fibonacci retracement level, which we have. I'm not even going to measure it. You can eyeball that's at least a 382. That's within the zone, okay? But what I want to know, what I usually do is I use my Fibonacci extension tool to measure that wave 3, to make sure that wave 3 falls where we typically expect it to. And wave 3 typically falls between the 1618 and the 2 Fibonacci extension of wave 1, which we exactly got, okay? Right here, do you see that? So this is our wave 3 right here on the DXY, on the weekly chart. And what I'm counting is 1, 2, 3, 4, 5 waves, and it hit the 2 Fibonacci extension, okay? And then you went into a wave 4, which is a very nice flat correction, right? Almost like a parallel, sort of perfect flat correction, not extended, not running, just standard, run of the mill. And what I'm going to do is I'm going to measure that retracement really quickly. So I'm going to take the bottom of wave 2, top of wave 3, and it looks like, okay, this is important. So your garden variety wave 4, you want to see retrace between the 236 and the 382. What do you see about this wave 4 that's interesting is the retracement is between the 0.5 and the 618. That tells me that this is going to be a leading diagonal. And a leading diagonal typically gives an extended wave 5, okay? So that tells me that there's very likely going to be a lot more positive price action in wave 5. So the dollar's going to go, I believe, on the weekly time frame. Okay, this is weekly time frame, not small time frames. We're going to get into small time frames in a second. But on the weekly time frame, what you want to do to project a probabilistic target for wave 5 is take waves 1 through 3, the retracement of wave 4. There's your orthodox low right there around 88. Okay, and then target the 1618. Okay, that's how you project leading diagonals. Waves 1 through 3, retracement of wave 4, the 1618 5 ratio. That dollar is likely to hit a minimum of 155. Okay, and how do we know this? Go into Prechter and Frost, look up leading diagonals, projection, Fibonacci projections, and this is kind of something we see over and over. This is how we get these measurements. We look at charts, and people see how often you get these leading diagonals and how often you get extended wave 5s, and that's pretty much what you get when you get a leading diagonal, okay? And it's a question of hitting the 1618 or above, okay? It can go to the 4236, it can go to the 6456, so on and so forth, right? It can hit all these Fibonacci levels. That's why on my Fibonacci extension tool, you see I have a lot of different levels. But the 1618 is typically your minimum, okay? And so if we just zoom out for a second, we can see there's going to be some resistance here, but if you break that resistance, it's likely, let me just do some pattern analysis right here. So assuming that the dollar gets up here, it's likely going to hit on a large time. Again, this is a large time frame. This is likely to take years to develop. Okay, this is not going to happen in a day. This is my target, around 200, right? Just doing the pattern analysis, right? Do you guys see that? That's my target right there. I'm taking the height. I can go on the monthly at this point. Okay? I'm taking the height of this right here. I'm taking the height of that pattern and I'm superimposing it from the site of the future site of breakout, okay? And what I'm going to do is I'm going to go back using this information. I'm going to go back and I'm going to lay my Fibonacci extension one more time. Waves 1 through 3, retracement of wave 4. And I'm going to see if it corresponds with a Fibonacci level. That's going to give me more confidence, right? It's just basically two different points of analysis converging, corroborating, giving me a stronger case. And my 2236 pops up. Do you see? So instead of saying 1618, I would say it's more likely than not that the dollar hit that 200, which also represents the 2236 Fibonacci extension of waves 1 through 3, retracement of wave 4. You see how I did that? Okay, that's the larger time frame. I mean, that's a massive time frame, right? Because I'm looking at the weekly. I've never done this before, but it's interesting. Now, what I'm going to do is I'm going to leave that on the chart, and I'm going to switch that to cycle, okay? Because that's a cycle wave. Cycle waves typically take years to play out, okay? Now, what we're interested in is the smaller time frame analysis, because we want to know what does this mean? What's the dollar index mean, or movement mean for Bitcoin in the short term, right? Will it allow, given that it's inversely correlated to Bitcoin, right, and inversely correlated to equities, will it allow Bitcoin and equities, the SPX, S&P 500, NASDAQ, to move to the upside, right? That's the answer, or that's the question we want to answer. So let's jump down into the daily time frame, and let's stay on the log chart. Or actually, we don't need the log chart right here, because we're just going to look at this small section of the chart right here. And what I'm seeing is the following. All right, just for a little bit of context, this is what we deemed the end of wave 4. Okay, so what we can do is we can start counting waves up here, right? And this is clearly parabolic price action, right? And that's what you call impulsive price action, right? The 53535 wave extensions and such. So let's just eyeball this and roughly put a count in for this, a primary count. So I would say this is like wave 1 right here. I'm going to change the degree in a second. This is your wave 2. I would say this is your wave. Remember, wave 3. Wave 3 is typically the longest and the most impulsive. Let's go wave 3, wave 4, and let's just say this is a wave 5 with an ending diagonal. Okay, now let's change the degree. Obviously, it can't be the same degree because the cycle. Remember, it's a Russian dolls, right? It's one within the other. So, if that was a cycle wave, this has to be the primary wave, right? Because that's 1 degree below cycle. Okay, so our primary wave shows 5 waves, and let's just now confirm that with our Fibonacci extension tool. We took the length of wave 1, retracement of wave 2, wave 3. Once again, do you guys see this? I mean, do you see how consistent this is? This, for people who think that Elliott wave is just like, you know, people drawing lines on charts and just putting in random waves, like, look at the consistency. Like, this is math. This is math. This is probabilities. Once again, wave 3, what did I say before? Wave 3 typically ends between the 1618 and the 2 Fibonacci extension. That's exactly what you have here. And I just eyeballed that, didn't I? I eyeballed it, and it just so happened. I counted the waves free-handed, and now I'm using my Fibonacci extension tool, the math, to corroborate, to kind of buttress my read. And that is indeed a good wave 4, because that probabilistically is exactly where your wave 3 ends. And I'm going to turn on one more thing. I'm going to turn on my volume indicator. I'm going to see if I can get, I can't see a heightened volume during wave 3, which you typically get. So let's turn on volume for a second. And it's just too low of a time frame. You see the volume is just minuscule. So we're not getting anything from there. And it's the DXY. So yeah, obviously we're not getting in volume. It's a basket of currencies. It's an index. In any case, I think we have an extended wave 5 here. All right. And this is a legal count. Why is it a legal count? What are the rules? Wave 3 doesn't have to be the longest wave, but can never be the shortest wave. Wave 3 is definitely longer than wave 1, right? So wave 5 can be as long as it wants. And wave 5 here looks like we have a wave 1, 2, 3, 4, and then an extended wave 5, an extended intermediate wave 5, you would call it, basically 1 degree below primary. And that looks a lot like what I talked about earlier, your ending diagonal. Do you see that right here? And this would be the converging type. Do you see that? Right here. Look. I'm going to draw this out for you. Do you see that convergence? And this is really interesting. So let's mark this up properly. You can do something really interesting with this. I'm going to show you in a second. So here's your ending diagonal wave 5, okay? And let's put in the minor count, because this is gonna be interesting. Watch this. So it goes like this: 1, 2. Hold up. Hold up. I think it goes like this. 3, 4, 5. I think that 5 is tiny. Okay. It's just so tiny. So that would be minor. Again, do you see that? 1 degree below intermediate. That's how you use Elliott waves. That's how you count them properly. Okay, so do you see that? It's one of these converging ending diagonals where every subsequent wave is smaller. So 1 is the largest, 2 is smaller, 3 is every subsequent wave is smaller. So 5 is just so tiny. Okay, 1, 2, 3, 4, 5. But I believe that is it. Okay. We don't need the count. All we need to do is show the pattern. And one of the reasons the pattern's important is because this is a rising wedge. And what do we know about rising wedges? They typically break down. And where do they break down? They break down to their origin. So I'm expecting the DXY to come down back here at the start of that wave. Sorry, 1 second. At the start of that intermediate wave 4. Sometimes you get confused. Like, what degree am I in? You know, there's so many different degrees. I'm like, I wanted to say wave 4, but I'm like, wait, wave 4 is down here. This is intermediate wave 4. I didn't put in the count, but I hope you're still with me. Essentially, this is a rising wedge, And so this ABC flat correction that we're in, and it's clearly a flat correction. Why do we know it's a flat correction, not a zigzag, not a triangle? Obviously a triangle, you know, you have converging triangles, diverging triangles, right? And you have, yeah, just, Nicolas, s'il te plaît. Converging triangles and diverging triangles. And then you have triangles, you have zigzags, and you have flat corrections. Zigzags, triangles look like that, right? So that's clearly not a triangle. A zigzag is a 535 pattern with a retracement between the 0.5 and the 618 typically, right? This basically blew through the 618 of this initial wave. So you know this is likely going to be a flat correction. And that flat correction, you know, is likely to come all the way down here, down to the beginning of this rising wedge. You see how that works? So this is why it's likely that we have a rising wedge break down to 100. Okay, that's where I expect the DXY to come in the immediate short term. Okay, I'm expecting an impulse, right? Because every last wave, the final wave of every corrective move, whether it's a triangle, a zigzag, or a flat correction, is impulsive. Okay, so this is what we're looking for. Expect the DXY to come down in the coming days. I believe we've hit resistance. Now, what we're going to do is we're going to jump into even smaller time frames and try and read what's going on in this B wave. Okay, and this is indeed a B wave. You see this right here. Let's jump down into, we can't go any lower, but if you look closely, let's zoom in here. You can see 3 waves, very well defined. 1, 2, 3. Okay, that's your initial break of structure, targeting wave 4 of the previous trend. All right, and that previous trend just so happened to be your ending diagonal wave 5. Okay, but it's not wave 4. Actually, this is going to be your wave 2. Your minor wave 2, okay? Typically is wave 4 of the previous trend if it's a 5-3-5-3-5 advance, but this obviously is an ending diagonal, so it's a bit different. But in any case, this is your initial break of structure, your A wave, okay? What you have after is a 3-wave move, 1, 2, 3, a B wave. This is your B wave right here. It's 3 waves. It's a flat correction, 1, 2, 3. Again, the final wave of every correction, every 3-wave move is impulsive. This is it. So if we can read how this is going, and this is likely 1, 2, 3, 4, 5, that is the end. This is the 5th wave, and it's extended. Okay? And it's likely hit some resistance. So the next move for the DXY is down. And remember what we said at the beginning of the video. The DXY, or the dollar currency index, the basket of currencies that are pegged against the dollar, right, are inversely correlated to equities and to cryptocurrencies. So if this is going to happen, right, then in this time, crypto is going up. All right, and now let's try and see how long this will take, right? Again, we're not just dealing with price. We have 2 axes, the price and the time. So let's do a time analysis, really quick time analysis on this impulse to the downside. Guys, if you're getting value, please like, share, and subscribe. If you do, first let's put it in. Okay, so this is an ABC flat correction. So let's go to Elliott wave ABC flat correction, put it up 1. So this is my A wave, this is my B wave. Let's assume that this is the end of it. You typically get a small kind of a small pivot into your impulse, but sometimes that pivot is not a flat correction, sometimes it's a zigzag, so it kind of leads into it. And again, our target is going to be around 100 coming down there. So if you even just do, let's take our time. So let's do two things. Before we do the time analysis, let's do the price analysis. Assuming we don't know how rising wedges typically break down and target the beginning of the wedge, let's do a Fibonacci extension, a price extension of this A wave, a retracement of the B wave, and what do we get? That the C wave, the 1618 is around 102, okay? So you typically do see a regular flat correction come between 1 and the 1236 extension, and then there's some extended flat corrections that come to the 1618. I expect this to come to the 1618 and wick a little bit below it to hit the base of this rising wedge, okay? So that is all good with our fib price extension. You see that both things kind of converge. We know that these extended flat corrections hit the 1618. We just saw that in Bitcoin a few moments earlier. Now let's do a time extension. So we go into our, and a lot of people don't know, I didn't know this when I was, just getting started out, that you can do serious and, accurate time predictions. So again, you take the A wave, right? So those three waves down, the retracement of the B wave, okay, let's say that we end around here. That's going to be the orthodox, end of our B wave. Even if we get a pivot, we don't count that. And so our C wave might target, so this yellow line is 1, meaning if, Nicolas, s'il te plaît, if the C wave, the extension here, takes the same amount of time as this A wave took to come down, then we hit it on September 8th, okay? Or, I don't think that it will take exactly the same time because, again, as I said, you do have something called a pivot. Price never changes direction just on a dime. You always have to do a consolidation reversal no matter what the time frame is. So do expect for a small pivot to be put in here. Even if it's not a flat correction, just like I said, you may get some sort of zigzag, but you will have to put in some sort of pivot for price to change direction from up to down, okay? That being said, I think it's more than likely that we target the 1618 for this move, which would give us until about the 15th of September. What's interesting about that? Let's look at the lunar phases because we all know price tends to bottom out on full moons, okay? So let's see. When are the full moons in September? I've not looked at this, okay? And just being perfectly honest with you, I've not looked at this earlier. I'm doing this with you. So I'll be surprised with you if there's some confluence or convergence in that. Oh, so we're looking at a full moon in September 2022, yeah? Okay, so Friday, September 9th. Okay, interesting. What do we know about lunar cycles? We know that price typically bottoms 0 to 3 days after the full moon. So 0 to 3 days after the full moon, that would put you at September 12th, okay? Back to our charts. September 12th is around here. So it's close. It's between the 1 and the 1618, 1236, okay? But it could also end on September 9th, which is around the 1, okay? And we know impulses happen quickly. So basically that's saying that in the next 15, 16 days, while the DXY is dumping, then Bitcoin and equities, the SPX, all that stuff, they're just going to pump. So 2 weeks of awesome upside. That's what we can expect, more or less, right? While it's pivoting and dumping. So 2 to 3 weeks, maybe 4 weeks. This means, and if you talk to a lot of analysts that are very keen on seasonality. Seasonality is basically there's a certain month that equities do well or Bitcoin does well, whatever. They say that crypto has bad Septembers. So I think that's bogus because, again, crypto's only 13 years old, 10 to 13 years old. Most assets are even younger than that. And so if you want to look at the months, it's spurious data. There's not enough data to say that, okay, that's always going to happen, right? So this is, I think we have a good September, a green September, as a result of just this DXY analysis. Now, let's jump into the SPX. And just to reiterate, the Standard & Poor 500, right, that index of stocks is right now, as we speak, directly correlated with Bitcoin and cryptocurrency. So when they're going up, Bitcoin and cryptocurrency also goes up. Okay, so what do we have? I've already done the count here on the daily time frame, and I'm seeing, and people are like, so first, before we go into the daily time frame, understand that we've just put in approximately 129 days of corrective price action. This is a zigzag. Or is it a zigzag? No, this is a flat correction. This is one of those. Is it a zigzag or a flat correction? It might be a zigzag. Hold up 1 second. Let me just measure. I'd say this is a flat correction. Or sorry, this is a zigzag. This is a zigzag. Yeah, this is a zigzag. It's a 5-3-5 move, okay? Where the intermediate move, the X wave, if you will, respected the 618 of your initial wave, okay? So let's just label this really quickly. A, B, C, like so, okay? So one thing you can do is you can prove to yourself that this is complete because it is, if you measure it, it hit its target. So you take the A wave, retracement of the B wave, down to the C wave. Where do these things typically hit? Just like we saw in Bitcoin, between the 1 and the 1236, it wicked down below the 1236 right there. That's your orthodox low. That's your technical low, okay? Obviously, the nominal low is here, but measuring this pattern, you're looking at this. So you reached your target, okay? Now, how do we know that this isn't part of some complex correction where you have, a W, an X, and then a Y or something like that? Well, you just have to zoom out. So let's zoom out for a second on the weekly time frame, okay? And if you recognize what you're in, which is a massive uptrend that equities have been in for since forever, you can see just the okay, let me preface this by saying this. I'm getting ahead of myself. In Elliott wave theory, there's a principle that states, or a guideline that states, that impulses and corrections are they're equal in time and price. They're comparable in time and price. So if you have this kind of correction, right, and that lasts, I don't know how long, maybe 100 days or something like that, expect another correction to last more or less the same amount of time, right? And then the impulse that is between them to last the same amount of time. Do you see what I mean? Like, you don't have an impulse that lasts forever and then a correction to that impulse lasts just only a small fraction of that. Or the opposite. You don't have an impulse that lasts this long and then a correction that lasts this long. That's not part of the same count. Do you understand what I'm trying to say? So if you just look at this chart, not knowing the entire count, okay, you just eyeball it. Do you see that this is obviously corrective price action, right? And this looks like a correction on whatever this was. So this took some time, this corrected this amount of time. This took some time, this corrected this amount of time. Now what you want to do is you want to look at the time this took and then the time that this took. Do you see? Right? And so going in, just measuring this right here, it looks as if this took about 651 days. You went up for 651 days and you corrected for about 140 days. Okay, that tells you that this correction is not adequate for this impulse. Unless, that full stop. There's no buts. Full stop. So I do expect the next move to be up, but then another move down. Does that make sense? Does that make sense? Like, let's go back here. I do expect another move up. Now, that move up is not finished yet, obviously, because this move is done, but this move is not done. This is complete in and of itself. But whatever this is has to complete itself, and then we put in an impulse. That's going to be a nasty bear market. Okay? So I've done this before on this channel. But let's just do it again. All right? Let's get out. This is the power of Elliott, of wave theory, right? Really puts stuff in context. It's not to say that this is exactly going to happen, but it gives you an idea when you're looking at charts to put it in context in terms of price and time. All right? So again, this is all from the principle of time and price, that impulses and corrections are comparable in time and price. So if this took 600, let's just say, let's take it to the top here, because right here, this is your pivot. Yeah, let's say 600 days, 595 days, okay? There's no way that this is the complete exhaustive correction, right? And you just start going up again. You can go up here, but that's just going up to come back down. Do you see what I mean? Like, stay with me. There's another thing I'll tell you. The fact that you got a flat correction that looks like this, and that lasted 154 days, which is approximately, let's just say, a third-ish of what you got here, it leads me to believe that you're in for a double three, meaning a WXY correction, right? A double three in Elliott wave theory, that's what we call complex correction that is comprised of a WXY. Typically looks like this, WXY, something like that, okay? I'm looking for this, okay? And this, if it took 154 days, right? This may take another 154 days, and then, or maybe the intervening one takes a little longer typically, like 200 days, right? And then the last bit will take you about 154 days, right? Am I doing that math correctly? Yeah, ish. Maybe 200 days, right? 200 plus days or something like that, right? And then you have to obviously add the pivots and all that stuff before your reversal out. Do you see how that works? This is a great way to get an idea of general guideline on the high time frame for what you're likely to expect to a high degree of probability in these markets. Now, that tells me that I can expect some sort of corrective price action to the upside for the next 154 to 200 days in equities. Thus far, and I'm going to delete this. Thus far, we've gotten from the bottom here 70 days. What does that mean? 154 minus 70, that's about 84, something like that. Let's just say 84 to 100 days. The next 84 to 100 days should be up in these equities for that reason. Do you guys see how this works? And so now, given that sort of high time frame weekly analysis, what we can do is we can now drill down into a daily time frame, 4 hourly time frame, and see what else we're likely to get. All right, guys, if you're getting value, please like, share, and subscribe. I don't see anybody talking about this stuff. I'm bringing to bear the full sort of extent of my understanding of my training in Elliott Wave and in charting on these kinds of analyses, right? And I do this professionally. So, what did I see last night? I saw an impulsive wave getting started, okay? And again, you don't know. The tricky thing about corrective waves is they can come in so many different types. The combinations and permutations of corrective waves are manifold. So I said that, your typical X wave is like this. It can be a flat correction. It could be a zigzag correction. It could be composed in and of itself, right? It could be a minor, it could give you one of these. Up, down, up. It could do one of these. It could be composed in and of itself. You have no clue, right? So you know what you don't know. You know that you don't know exactly what it's going to look like, but more or less the general direction of this correction is going to be upwards, okay? Now, that being said, what's this on the daily time frame now? You can see now what I did. I put in an Elliott wave count. I'm seeing this. So this trend, that A wave, ended here for me. Okay? I'm going to turn my volume on, see if I can't get... Oh, no indication of volume. That's fine. Okay? It ended here. And from there, I see a typical A wave, right? Initial break of structure, basically price saying, I want to move in the opposite direction. Okay? That's your A wave, your initial break of structure. Typically targets wave 4 of the previous trend, right? That's wave 4 of the previous trend. And then a corresponding B wave. That's a flat correction right there. And you get another, that's your first degree of AB basing. So that's big A, big B. Okay. And then another A wave. That's small a. And then a composed B wave. That's small b. This is the start of an impulse. Okay. So for people freaking out, saying, oh, we're going to short these markets, be very careful. From what I'm reading, you don't want to go short on equities, on the NASDAQ, on the S&P for about 80 to 100 or so more days. You don't want to start thinking short for some time. Okay, maybe there's going to be some moves to the downside, but you don't know. It's going to be volatile, okay? Because these are corrective waves that you're going to be trading. But at least in the short term, this is clearly an impulsive wave, right? 1, 2, 3, 4, as I put in. And now you can expect an extended fifth wave. Once again, we pull on our understanding of leading diagonals. This is exactly what I've said before, a leading diagonal. So you take your wave 1 through wave 3, retracement of wave 4. What do you expect to get? A minimum extension of the 1618. Now, We have not yet hit the 1618. And we've corrected quite starkly. What does that tell you? That means this is likely wave 1 of that 5th wave extension. So do you see what I'm saying here? You can start, it's highly likely that you can start counting 5 waves from here. Okay? And this, again, is likely to be a sort of corrective wave that you're getting, right? Don't expect this to go up forever, but just based on what we're reading, this, now let's just assume the 5th wave starts here, okay? We can anticipate on the small time frames some flat correction like this, okay? And it's very likely to continue up, Elliott wave count aside, for the simple reason that you've put in a higher high. I mean, this is just basic price action, basic charting, right? This was your previous high, you broke it, you're retesting, and you continue. Every time you want to go up or, you know, or go down, you have to break, retest, and then continue. Do you see that? You broke this previous high, you shattered it. Now you retest it with this flat correction or whatever you want to do here. Likely going to be a flat correction. That's what it looks like. And then a continuation. Now, using our understanding of, now let's go back. Using our understanding of the leading diagonal, we can start to look and see at some targets for this wave 5 extension, okay? And so it's probably going to be up here somewhere between the 4236 and the 6854 at minimum, because this is wave 1 of 5. You have to put in wave 3 of 5, which has to be a minimum of the 1 Fibonacci extension of wave 1. So wave 3 can't be any shorter than wave 1, right? That's why the minimum extension of wave 3 is 1. Maximum extension, it can be extended however long it wants to. But now let's do this again. So let me erase the last one so you don't get confused. What do we know? Probabilistically, wave 3 ends between 1618 and the 2, okay? And wave 5 comes up and typically is the height of wave 1 or the size of wave 1, okay? So let's expect conservatively, the conservative target for any 5-wave impulse is the 2236. So 5,058. So let's just keep that in mind. I've circled it, okay? 5,058. Now once again, let's put on our Fibonacci extension of wave 1 right here through wave 3, retracement of wave 4. What the hell does that hit? Do you see that? I mean, guys, are you seeing this? It's literally right on the 4236 fib extension. This is where I anticipate the S&P to come to in this move. And then based off of my time prediction, my time analysis, I'm expecting that move to be done within the next 80 to 100 days. Okay? So let's draw it out. Guys, if you're having fun and you're getting value, like, share, and subscribe. Goodness gracious, I don't see anybody talking about this. Anybody going into this level of detail. Right? I'm pulling out all the stops. I'm not sparing any expense. I'm really just giving you everything I know. I'm not holding anything. I'm not charging for anything. I'm not like, okay, and I'm gonna leave the rest for some course, whatever, and that's fine. No disparagement or shade on anyone charging for courses, but I'm giving everything to you guys, everything I know, free. But it's not free. You know, you have to pay for it in your attention, and most people don't have the attention. I know YouTube tells me that most people get on these streams for 6 to 7 minutes and then sign off. And because I'm not like out here trying to entertain you guys with platitudes you know, some bullish gimmicks or bearish gimmicks, whatever. This is pure analysis, and it's for you to even understand what the fuck I'm saying. You have to have a rudimentary understanding or put in some level of work. That's what you pay. You pay in terms of your education, the time you put in to even understand what I'm saying, to make sense of this analysis. And if you can, you paid for it. That's your payment right there. It's not money to me. It's payment, that investment that you made on yourself, and trying to understand the markets. In any case, here's my count, okay, pretty much, and so we have 106 bars. Let's try and see if we can get something like 106 bars here. 106 bars would be around here. 154 days, 156 days. Let's just say this is something. Let's just say it's the same for all intents and purposes. Right? Let's say it ends up taking as long. I would expect equities to peak in November, October, November, something like that. Okay? And give once again this kind of pattern. So my wave 5 would be here. So I would expect something like this. Okay, and you guys see, I'm not just guessing. This is based off analysis. Like, this is the flat correction I expect in the market. As actually, let's be. So I expect a retracement here to be. I'm expecting the retracement to be done to at least the 382, okay? So taking the orthodox low, orthodox high. I don't know what wave this is, okay? I'm not pretending to know what this wave is. If it's a wave, I don't know what the wave is. So I'm just going to assume the retracement is going to hit the 382, maybe the 0.5. It's going to look something like that. Do you see how I got there? Do you see I'm not just drawing lines on a chart? Do you see how I'm using math? Do you see how I'm using time? Do you see how I'm using price? Do you see how I'm using, principles, guidelines? There's 13 editions of the wave theory, of Bob Prechter and AJ Frost's wave theory. For over a decade, they've been practicing for over half a century. They put all their knowledge into that wave manual. I've been reading that. I've been studying it and other manuals. Everything there you can use to use and understand to a high degree of probability. Never 100%. It's never, yes, it's definitely happening. A high degree of probability, understand what markets may do. This is how powerful Elliott wave theory is. This is not about me. It's just fucking amazing that anything can do this. And using this projections, we can even project the time. Next, so what do we have? Until November. So basically till the end of the year. And that would coincide with what we typically see seasonally in these traditional markets. You typically get traditional markets selling off, peaking in the end of year, people taking profits towards the end of year for the holidays. This is what the charts are telling me, not the Fed, not the money printing, not macro, nothing. Just the charts, my friends. And so I'm seeing the S&P come back down to these levels, if not right below, down to 3,200, okay? So as a result, again, I have no direct exposure to traditional equities. I don't give a damn what they do, only insofar as they play nice so that they don't completely disrupt financial markets so crypto can do what it does, okay? But this is basically saying that crypto is open and ready and free to move up for the rest of the year. So we're in August. November is, the 11th month. That's 3 months of positive price action. Okay. But I do have the top of Bitcoin projected for February 19th of 2023. So I don't know really how that works, or if, for some time, crypto will continue to move up while equities stall. I have no idea. But this is just I'm not trying to fold and make anything work. That's my analysis. I did them independently. So that's what I got. So Steve says, hi, Dean. Understand that you now only do spot trades. So my guess is your analysis is based solely on spot trades. Yeah? No, not at all, Steve. Not at all. I do. So right now, I'm aggressive, Steve. I'm 70-30 maybe. But I wouldn't recommend that. I recommend most people do 60-40 at most, if not 60-40 meaning spot to leverage, right? I'm 70-30 leverage spot. I have spot positions that I've had for quite some time, and I added a little bit more. But, I like to live on the edge. I take a lot of risks, relatively speaking, but I'm still, using good risk management. And I have leverage trades. But, Steve, the difference, and you know very well because you've been subscribed for a long time, difference in my trading now than before is I have a longer time frame. So I don't trade as often. I trade longer time frames. So I'm making more. I'm losing less, if at all. And I'm basically, my investment horizon is much larger. I'm not so concerned with the small fluctuations in price on the 4 hourly time frame and whatever. I have enough margin to be able to survive fluctuations, and I have I have like 120x. Most of my positions are between 3 to 10x leverage, okay, between 3 to 10x, but I have like 120x, but it's a very small position, but it's low leverage, relatively low leverage, and high time frame, using my analysis, betting on the price going up, and basically treating it like a spot trade, like a leveraged spot trade. Yeah, so that's pretty much what I'm doing. So the analysis is the same whether it's spot or leverage, Steve. It's just, if it's leverage and it's small time frame, then I'm every day looking at the hourly time. Like, that shit is stressful and it's low probability trading. It's not that smart because it's very stressful. It's not something that you can consistently do for a long period of time, which I've lived, right? I by experience. Even if you're winning, it takes all your time and effort, and you have to look at the charts constantly, and you have a relatively low win rate. But it takes a lot of work to get a little bit. If you're not in chop and you're trading a large macro trend, right? Like a bull market or a bear market, like a 3-month move, like I'm looking at a 3 to 6 month move, right, in Bitcoin and crypto, as well as in equities. You can make so much money just accumulating close to a bottom and then selling close to a top. So that's my thesis. That's my technique right now. And then once we get and chop into chop, maybe towards the end of towards the top, I'm going to pull out and take a very small percentage of my portfolio and play with it and trade chop. Do you see what I mean? But I'm not trading important money when I'm trading chop. And I did go over that before. The different types of markets, right? Up markets, you just try to buy close to the bottom. Most of your positions should be spot, very few in leverage. But if you're taking leverage positions, be very careful, leave very wide margins, and then trade that shit up, right? And then down markets, you do the same thing, but on the opposite. You buy, either you de-risk and just sell out into stables or fiat, right? And that's a trade because you're making a decision and you're deciding not to be involved in the markets. Or you short and you build positions with high enough margins and you just wait for it to go down, okay? But you build positions towards the top, okay? Or you don't do anything. And then sideways markets, chop, where you go on smaller time frames. You take a really small percentage of your portfolio and you just play up and down. Okay, very low percentage, relatively speaking. You're not going to make as much, but you can fine tune your skills in trading and reading the market. You can have fun, but the worst thing you can do in this type of market is trade the most of your money. Most of your money should be out of the market. You should be playing with a small percentage of your portfolio up and down. So that's what I said, just to clarify. Okay, so that's what I'm seeing in equities, okay? And that's why I believe that's very likely that Bitcoin react in kind, okay? And so to close this live stream out, guys, we're going to go on small time frames and revisit what Bitcoin's doing, or what it's done in the time we've been on our stream. Guys, if you're getting value, please like, share, and subscribe. Alright, so on the hourly time frame, and what we had said was we're likely in impulse starting here, right? 2 degrees of consolidation, reversal pattern, AB basing. And we saw some type of diverging ending diagonal here. And then our start of our three-wave move, and then probably some sort of correction here, I don't know, something like that. Or maybe that diagonal is not finished. Maybe we get something like this. But what I'm seeing in Bitcoin is a flat correction. So we get something like this before continuation, okay? And that's pretty much all I see in Bitcoin. Now let's go into Litecoin real quick. This is very nice. You already see Litecoin made the higher high. And Litecoin, if you want to trade, not financial advice, but financial advice. If you want to trade an asset that's not a low market cap asset that you don't know if, the founding team or the developer is going to rug it or whatever, but something that's going to pump, most likely it's going to be Litecoin. Something that's going to pump in the top 30, it's going to be Litecoin. Reason being, if you go on a large time frame, you can see that it's the whole existence of this asset has been a leading diagonal. Do you understand? It's been a leading diagonal the entire cycle. So cycle 1, 2, 3, and 4 waves are leading diagonal. That means it had a truncated wave 3, and it's going to get an extended wave 5. So this is going to pump. Basically, what I'm trying to say in non-Elliott wave terms is Litecoin is likely to make up for all of the shitty price action it's put in for the past however many years it's been trading. So, Litecoin. So I'm not surprised it's looking the most bullish of all the top coins, right? All the top projects. Right now, they're looking fine. But Litecoin is one of the ones that made a higher high here. Yeah? So you made your higher high. You made your higher high. So you put in your 2 degrees of AB basing. Let's just show you that real quick. A, B, so that's big A, this is big B, this is small a, this is small b. Your impulse starts here, okay? So that is your retracement. It's probably I don't see a wave 2 put in yet. These are big waves, my friends. These are big waves. In any case, Litecoin's looking good. Look at all that buying pressure. Look at all of those. You have one bearish candle, but that's the end of the trend, I believe, of the small time frame trend. Most of your candles are slanted up, and they're bearish, sort of what do you call those? Hammer candles. It's very nice. Expect this to pop out. Pop out and meet this high. Again, you're going to go the height of this inverse head and shoulders, or this cup and handle. So up here. Okay. So I see in Litecoin. These are looking good. I know people are impatient. I mean, we've been waiting forever. It's been 460 days maybe in this no, actually, it's been 100. Let me be clear. It's been 109 days, I think, at this point. If you look at the consolidation reversal from this orthodox low, right here, May 12th, most altcoins put that low on the way May 12th. If August 22nd was the start of the bull run, that's 102 days. I know why people are pissed. I know why people are impatient, but that's just the name of the game. If you're patient, you stick with it, you keep showing up. Most people that are in the market, that are exposed, even if they don't know shit about trading, and they buy in the middle and they don't know how to chart, they're going to make a lot of money. They're going to make some money. They're going to make a decent amount of money just because they showed up every day. And they're able to be there for the bear market. They're able to be there for the start of the bull market, whether they can read it or not. The prices are going to start to go up. They're going to get happy. They're going to take some profit. They're going to make money. So even if you don't know what the hell you're doing, just show up every day. Period. You literally don't have to be skilled. Just show up every day. You're eventually going to make money. These markets go up and to the right in the aggregate. Just like you see the traditional stock market, it's up and to the right. I remind you. I'm going to show you something. It's up and to the right. These people are not geniuses. People who are invested in the stock market, real estate, even when it corrects, it doesn't ever correct to go down beyond where it started. At least it hasn't in our lifetime. Okay? This is the monthly chart of the S&P 500. Okay, I'm going to go on log. Okay, it goes back to it's going back to 1972. Do you see how even if you're not really versed in charting or trading, or you don't know what the hell you're doing, it's up and to the right? Yes, it goes up and down and chops, but eventually you make money if you keep showing up, if you are exposed. The same thing is true for crypto right now, albeit on a smaller time frame, right? Let's prove it to ourselves. Bitcoin, small time frame on the monthly chart. It's up and to the right, my friends. So, I know I've talked about a lot of technical stuff, and I'm given this and that, and if you don't know shit, that's fine. You're still going to be fine. Just keep showing up. Just don't quit. The people who are going to lose quit. They sell. They get scared. In 10 years, 13 years of existence, not once have we started creating lower lows in the aggregate, okay? So even no matter how bad it looks, in your lifetime, it's likely that this trend continues. So just be exposed, stay with it, buy high, sell low, do whatever you want, but just don't quit. You will eventually make it. And most people who've made it, very few people know how to chart. I'm going to tell you the truth. Very few people know how to trade. Very few people know how to chart. The findings are established. 90% of people who start trading leverage lose. 9 out of 10 people who start trading leverage lose. Are you in that top 10%? Probably not. This is why I say take a small percentage of your portfolio and trade leverage. Just so you can give yourself a chance to make it. Okay? And then keep learning if you're really excited about it. Keep learning. Do it. But take a small percentage of your portfolio. The rest, buy in spot, make mistakes, and give yourself a chance to make it. Give yourself a chance to take advantage of this up and to the right sort of trend, okay? I know I'm a little reckless, but still, even with 30% of my portfolio that is on spot, I'll be fine. I'll make generational wealth. I'm doing 70% because, this is what I do. This is my job. This is my passion. This is my everyday. I'm always looking at the charts. I'm working through this. I've made every single mistake I feel in the book. So I've lost a lot of money, but I've made a lot of money as well. And I think I can make even more. That's why my allocation is 30% spot, 70% leverage, but I do not recommend that, okay? Just to be clear. All right, now let's go back to what we were talking about. I think what we were saying, we're looking at these different altcoins, yeah? Let's get off log. We don't need to be on it. We were looking at Litecoin. We were talking about that on the smaller time frame. Yeah, that's what I was saying. We definitely were on the monthly chart. We're on the hourly, I think. Okay, yeah. Okay. Oh, yeah, I was saying Litecoin's looking more bullish. If you look at all of the top 30 or top 50 coins, Litecoin's looking particularly bullish. Do anticipate for us to hit targets between the 25th and the 28th, in my estimation. Okay? Why? Again, if you use the lunar cycles, which are here. Okay, it's not going to show up on the hourly time frame, but the full moon, the next new moon, right, is the 25th, okay? And that's in a few days. And typically 0 to 3 days after the new moon, you can expect a local market top, okay? It's not really accurate during phases of consolidation. So if you go on the daily time frame real quick and you turn on your moon phases indicator, which is on TradingView, by the way, and you look, you'll see that here your full moons are on the bottom. And this was consolidation, but this was still kind of accurate, but not really, because it was just consolidation past 100 days, yeah? So you did get full moons close to the bottoms, but it wasn't like what it really is. But once we are in impulse, you'll really see more accurate sort of reads on this indicator. I don't know what it is. We're natural beings. The markets are natural. Elliott waves natural. Fibonacci is natural. Moon phases are natural. So whatever. I don't know how it works, but it seems to work. So on 0 to 3 days after the new moon, typically represents a zenith, a local zenith, a market top, local market top. Okay, so that's what I'm expecting around the 28th to the 25th to the 28th, that we make that first leg up. And so that would be where I think we make this high. All right. Cardano, same thing, looking really bullish on the daily time frame. Let's just stay on the daily time frame for now, but you can see these very beautiful bullish hammer candles, strong wicks to the downside, likely to come up, right? Dodo, same thing. You have this strong bullish hammer candle. You're going up, likely to hit the top here sometime in the next few days. All right. Ethereum, looking great. Strong bullish hammer candle. You have 2 in a row. All right. Where do you think this is going? People thinking that this is going to break down, sorely mistaken. I mean, just basic, not even going into Elliott wave, but just basic candlestick are showing you that you're likely going to come up to here, to this resistance around 2000 once more. Yeah. SHIB, same thing. Just look at, do basic candlestick analysis. Here's your next resistance around this level right here. Okay. RSR up here. Cadena up here. 2.37 cents. Telcoin, I don't know. Maybe up here. 0.002 cents. Okay. But again, you don't want to underestimate these moves because this is a bull market. So it may go up, but it doesn't necessarily mean it's going to hang out and consolidate forever. It may go up, consolidate just for a little bit, and then keep going up. So if you don't have to take profit, don't. Again, it's a bull market. If you're smart, you get the hell out of the way. The only reason I'm taking profit on anything is because I have to pay for living expenses, because this is my only income. Okay, Ravane, same thing. Probably going up somewhere here. Okay, Veracity, I would say around here, around 0.001, 0.01 or 1 cent. Okay, and EOS, it's already broken out. Do you see that? Some things are leading the market. EOS tends to be leading the market. So that's it for me, guys. Don't forget to like the stream on the way out. I hope you have a great Tuesday. I hope this was helpful. Hope this was useful. Hope you're well positioned to make life-changing wealth in this market. And I will see you guys tomorrow. All right. Bye.